Hey everyone, Steve here from theturtlefollower.com, and in this video we're going to take a look at a long trade setup in AIG. Now, we've been talking endlessly for the past week or so about the market just going sideways, and sure enough today, pretty much closed up a few points, but nothing major. But there still continues to be plays out there to the upside and downside, so we're going to keep alerting you to those, and one of those is AIG. Now, members have we talked about this briefly when AIG initially broke out. It was on our watch list stocks. I think we even identified a potential long setup here on the 7th. So with them in the trade, we can go ahead and now look at potentially adding to that position, or if you haven't had any financial exposure and you're looking to add something, you can add a brand new position in AIG. So the setup essentially is we've been consolidating on the weekly chart for some time now. You can see we can even extend this all the way back until the middle of 2013. So a little bit of 2013 and basically all of 2014 and a little bit of 2015, we've been going sideways. All right. What happened and whatever changed in AIG, we started to essentially put in a series of higher highs and higher lows, and we pretty much have this breakout uptrend now in place. So we identified a potential area for a long setup in AIG, again with a breakout here on the 7th. But if you missed that one, not to worry, because it's now setting up once again. All right, so this is the beauty of this trend following system. You don't have to get in at the bottom, and you're not going to get in at the top. The fact is you're just going to get in at some point when your criteria meet each other. All right, so here was one setup, now here's another. Okay, breakout to new highs, and now we can identify along that uptrend. All right, either this uptrend here, if you want to adjust it a little bit, you can also adjust it to take into account the actual lows, the lows of the day. Either way, and you can put a stop now right here at 58.15. Or if you want to be a little more conservative, you can still go down to 55.90, and that puts you below the 50-day. Or if you want to be a little closer to the 50-day, use this 4-day low right here at 57.72. Whichever way you want to play this, you can. If it was me, I am personally in AIG when we originally announced the position, the entry on the 7th. I've been in AIG. If it's me now and I'm adding to my position, I'm using 58.15 as my stop. Okay, so 58, call it $58 is the stop in AIG, and that's as simple as it is. All right, breakout to new highs after a consolidation, put your stop at the lows, and what happens at that point? Well, you break down below the lows of the consolidation, you break the 50-day moving average, and you break trend line. I'm sorry, you don't break the 50-day, you break trend line. Okay, and that trend line has carried you from the lows here in the end of January through the lows of the 27th of March, again the 30th of April, and sure enough the 29th. So it's pretty funny, right, how we get these lows, it seems like every month, the end of every month, the 27th of March, the 30th of April, and now again the 31st or the 30th of May. All right, so interesting to see that. That wasn't something that I had planned for, but just, again, interesting to see that the end of the months usually mark the lows, and sure enough, that's what we have here. So, again, that's the simple trade setup for AIG. Enter tomorrow at the open. Put your stop under 58.15. Disregard the 50-day moving average is my play, because it's really hasn't supported much. Just really the one time here in the 30th. But again, I think you break this downtrend line or this uptrend line, probably a pretty good chance you're going to break the 50-day moving average. So that's how I'm playing AIG. And if you guys have any questions or comments, leave them below. Otherwise, thanks for watching, and we'll see you tomorrow.